Honestly, I was quite skeptical of this company at first, but the company is actually already generating revenues as we speak, and it might just be a 10-bagger in the making. Today we are looking at another graphite mining company, namely the Northern Graphite Corporation, or these ticker symbols. This company has the full rights to 3 different graphite properties, of which 2 are located in North America and 1 in the all too familiar Namibia. And like I stated before, one of these properties is actually already producing graphite as we speak. So the potential is there. But is it a safe enough bet to invest in? Well, let's analyze that in this installment of Analyzing Your Stock Picks, the series where I analyze your stock picks. Let's get right into it with first, a company overview. So we are looking at a Canadian company operating under Canadian legislation, but the stock of the company is also trading on the American OTC or over-the-counter markets. Pretty big flex. As we speak, this is the only North American graphite producer, but a handful of competitors should come online between now and the end of this decade, so this flex will not reign supreme for long. For right now, the company is only focusing on the graphite concentrate, not necessarily on anode materials. But it has publicly stated that it is also working towards those anode materials too. So 3 different properties scattered around the globe, of which 1 is located in Canada, Lac des Îles, which is currently producing around 15,000 tons of graphite concentrate a year. Keep in mind, the company hopes to upgrade this plant to a 25,000 ton per annum production figure reasonably soon. Second property, Okanshandé in Namibia. This plant was already operational previously and should come back online at a 30,000 ton per annum production figure within 12 months. Also, the company hopes to expand this plant to a 100,000 plus production figure in the future. And the third property, Bissett Creek in Ontario. This is actually the highest margin graphite project globally, which is another enormous flex. It doesn't have a mining permit yet, but there are plans for a 40,000 ton per annum production on the medium term and a 100,000 ton production on the long term. These are the catalysts that the company has stated themselves, and I really want to outline 2 of these catalysts which are pretty significant. Number 1, the announcement of the PEA of the Namibian expansion plan. And second, the restart of commercial production in Namibia. Both will be pretty significant catalysts since they will give a lot of clarity about the growth plans of Northern Graphite going forward. So I believe these are the main 2 catalysts for Northern Graphite on the medium term to keep your eyes open for. The next thing I want to highlight is the capital structure. It is important to note that there are quite a bit more shares on a fully diluted basis than on a shares outstanding basis. Basically, what this means is that those shares from those options and warrants do not really exist today, but most likely they will exist in the future. That means that we all gotta use this fully diluted figure for our calculations of the company. Also important to note, the company could raise an additional $35 million in cash just from their current warrants being exercised, which isn't a bad trade deal at all. Now onto the financials. Back on the 30th of June 2022, the company was sitting on roughly $9 million in cash plus an additional $9 million in deposits. It also had quite a bit in inventories at about $15 million thanks to their Lac des Îles property. And if we take all their assets, so $105 million, and subtract all their liabilities, so $61 million, we get to the shareholders' equity of $44 million, meaning the company should be worth $44 million based on a book value basis. If we compare that to the current share price of around 35 cents, which gives the company a market cap of $57 million on a fully diluted basis. And that means you are paying about 1.3 times book value on the stock market, which isn't bad. Book value isn't something that I focus a lot on, but it is something that can give you a margin of safety. A safety cushion to fall back on if the rest of the investment hits the fan. Okay, so we have talked about the future plans and the financials pretty extensively, but the company is already producing graphite as we speak at a pace of around 50,000 tons per annum. So let's talk about that. I do want to highlight this. During Q2 2022, the company realized an average sale price of graphite at about $2,000 per ton, which means the company will make around $30 million in revenue per year from their Canadian plant. Surely nothing mind-boggling. But if you compare that $30 million figure compared to their current $60 million market cap on a fully diluted basis, those are some substantial revenues compared to their current market cap. And that was a quick and concise overview of the company, at least I hope. But aside from understanding the business, there's at least one more component of successfully investing: valuations. So let's talk about my valuation. And really, that valuation starts with this: the future expected output of each property in combination with the current average selling price. I'm taking a roughly 2024-2025 view of the company, where we take the baseline production figure for each property, so do keep that in mind. Anyways, all those baseline production figures in combination with the average selling price results in this figure, the total revenue figure for 2024-2025-ish. And this number we can use. Specifically, we can slap on a PS ratio or a price to sales ratio, meaning how much a company would be worth compared to its revenues. A 3x ratio seems fair, pretty conservative actually. But those future revenues times a price to sales ratio of 3 results in a future market cap of roughly $600 million. And that, in combination with the current fully diluted shares outstanding, results in a future share price of roughly $3.5 per share. So honestly, if the company executes, they could easily 10x in just a few short years based on the current share price. Very exciting prospects. And of course, we can express that future price target in a buy target today, which I have done here. But this should be taken with an enormous grain of salt. The message I wanted to get across from this valuation is really the following. Number one, the company easily has 10 to 20x potential on the medium term, and that is insane. Number two, it seems that the company is being valued based on the revenues it is currently outputting, namely that $30 million figure from their Canadian property. And that means number three, all their future expansion plans aren't really being discounted into the current value of the company. It seems that the Namibia and Ontario projects are a free addition based on the current valuation. And if that is true, that would be an amazing opportunity. The value proposition, the risk versus reward, seems to be amazing. But to be fair, I haven't done nearly enough due diligence to invest in this company. For example, I really need to get a clearer picture of the costs going forward. After all these expansion plans will cost money. Where will that money need to come from? But the company is hella interesting, especially based on the current valuation today. And that is what I want to share with you guys today. And with that said, thank you so much for watching. I love you all. Peace.